Is crypto going to keep crashing in 2022? Is this going to be a very brutal year for the markets? Well, we have to take a look at the macro picture to try to understand what is happening in markets right now. What is the attitude of the average investor as well as the institutional investors towards the market at this time? So in today's video, I'll be exploring all of that. This is an info-packed video full of some very important stuff that you need to hear as an investor right now. So make sure to watch until the end to get all of the goods. My name's Lark. Every day I make videos talking about cryptocurrency investing. If you do like that topic, you like staying up to date with what is happening in the cryptocurrency market, then a quick tap on the thumbs up button to let me and YouTube know. That would be pretty gosh darn cool. By the way, every single week I make Wealth Mastery. This is a cryptocurrency investor report. We are constantly seeking out new opportunities in the markets. And in spite of all the insanity we've seen in the markets, there are still ways to be making money, from token sales to airdrops, to new DeFi farms, to hot altcoins, NFTs, and much, much more. You can sign up for free using the link down below in the description. Now let's go ahead and get into this topic. First, we need to talk about the price of oil. As Jim Bianco points out here, not every recession is led by a 50% rise in the price of crude oil. But every 50% rise in crude oil has led to a recession. Well, and that is exactly what we are seeing right now. We are seeing a mega rally in oil, the exact kind of mega price rally for oil that has historically led to a recession since the 1970s. That's something to consider, isn't it? Well, recession potentially coming. Now, on average, recessions last for around 11 months. So during that time, obviously, a lot of tricky times for investors. I want to share some of the thoughts here from Raoul Pal as well. He said, of all the crises I had witnessed, this feels most like the Asian financial crisis and the Russian default of '98. It starts as a slowdown, morphs into a larger event, and ends up as a full liquidity crisis. He says very different, but very horrifically similar in other ways. In particular, he pointed out that during that time, we saw the S&P 500 down by 25%, Europe went down by 35%, Asia down by 70%, largest recession on record, Russia down by 85%, the largest default in history. Hedge funds blew up, banks blew up, and the Fed had to step in as a credit and bond markets seized up. We are heading for mass financial insanity right now with everything that is happening in the markets. And look, maybe all that doesn't come to pass. Maybe this maybe the oil price explosion is not going to indicate a recession this time. But a lot of people are saying that's exactly what is going to happen, that the US economy is looking at a recession, that the global economy is looking at a recession. That, of course, is not awesome for markets, is it? No, of course it is not. Here is why the impact of Russia's war may linger for some time and why investors should be cautious. And yes, I think that with everything happening right now, this is a time for caution. See, when it was just the Fed and what that effect was going to have on the market is like, well, you know, that's manageable in expectations, right? But now that we have so much going on, definitely a time for taking a more cautious approach in this market. We have an analyst here from Bank of America saying this is clearly not a temporary risk-off event that the economy and markets shrug off and return to business as usual. What we are seeing right now is a very big global event with the prices of oil skyrocketing, inflation skyrocketing. It's absolutely nuts when you start to put all of the pieces together. We're going to put some of those pieces into the puzzle in today's video, obviously, but it's a very big and complicated picture. And unlike other events where it'll just be, oh, it's a quick little dip and then we bounce back up, it's all cool, this one could have much more lasting impacts on the global economy. Now, right now, we're looking at a massive collapse of the Russian economy potentially. And just to give you some idea of the scale of what we're talking about here. So Lehman Brothers, which, was a big part of the 2008 financial crisis. Evergrande, which everybody is freaking out about just a few months ago, were both much, much smaller than what is happening in Russia right now. Sberbank alone, which is the biggest bank in Russia, had, I should say, obviously the stocks are down dramatically now, but pre-crash it had a market cap of around $80 billion. Then, of course, we have to consider the entire Russian stock market, which was around $700, $800 billion. 80% of that is owned by foreign funds, all of which are now forbidden by Russia's central bank to sell. That's some crazy stuff, man. That's some crazy. How does all of that unwind? Just the Russian equity situation is a mess. Then, of course, we have to bring in the oil, the inflation, all this other stuff. Start to realize it's a very complicated and messy picture. Gabor Gabaks here, he pointed out, he's director over at Van Eck, by the way, he pointed out that, of course, we've seen $12 trillion printed in the past 2 years. Major central banks all over the world have been printing like crazy. Absolute crazy. $12 trillion. Just inflation has gone nuts because there's been so much money just dumped into the market. Now, of course, we have this just flood of money that's come into the market. And we also now have all these issues around supply chain issues, economic slowdown, the Russia situation and what's going to happen to their economy, all these companies pulling out. How's that going to affect the bottom line of all these companies? McDonald's pulling out of Russia, that represents, a couple percent of their total global business, and on and on and on. Starbucks, how many Starbucks, what effect does that have on the international companies' total revenues? Q1 revenues for a lot of these companies are probably going to be hit by pulling out of the Russian market. So there's a lot of things coming into play here. Bitcoin fundamentals remain strong, says the co-founder of Glassnode, but the macro environment is driving the price. We can bring this up here. Fed faces inflation while 10 and 2-year bond spreads are entering into the warning zone. Again, just behind my head here, we are heading down into the warning zone and getting close to the recession zone. So we're actually entered into the warning zone, getting close to the recession zone. So another indicator showing that at a macroeconomic level, things are looking pretty gosh darn cook. Then, of course, we have the Federal Reserve and the rate rise. And we discussed this a few times, so I'm not going to go over the numbers here again with you, but just real quick, the last 5 times that the Federal Reserve increased the interest rates, every single one of those times, the market dumped. And it took, on average, 18 weeks for the price to get back to where it was when the rate hikes were announced. Not talking about new highs, just to get back to the baseline of where we were before the Federal Reserve started raising interest rates. The good news, of course, is that after a year after interest rates were raised, we saw stock markets in most of these cases actually finishing on average 7% higher. That being said, that's next year. That's next March this time, right? What will happen between now and then? Well, anybody's guess with all the craziness going on at the macro level. And look, there's a lot of stuff going on here, a lot of moving parts, a lot of things that you cannot control as an investor. This, especially if you're a new investor, you haven't seen these kind of market conditions before, this can psychologically be a very difficult time. Fear is everywhere. Everybody's freaking out. They're freaking out on the TV. They're freaking out in the media. YouTubers are freaking out. People are freaking out on Twitter. Any rallies that we see tend to be quite short-lived and followed by yet another dump that psychologically beats you down. The gains are few and far between, although they are still out there. I would like to say that. Seeing red in your portfolio all the time, also not the most uplifting experience, is it? But just remember, none of this lasts forever. The bears will hibernate at some point. The price of oil will normalize after some time. Recessions end. Stock markets recover. The Russian economy will do whatever the heck the Russian economy does eventually. The war in Ukraine will end. All these things will find their end at some point, and markets will recover. People will become optimistic again. Money will start flowing in. But right now, we are in a period of extreme uncertainty in the markets. And as we know, markets freaking hate uncertainty, man. It's one thing the markets definitely do not like, and we have a lot of uncertainty. And like I said, if it was just the Fed, that would be manageable in terms of our expectations for what could or couldn't happen. With all the other stuff going on, you start to realize there's a lot of moving parts here that make the investor landscape one where caution is required at the moment. So play it safe. We have all this stuff going on. You know, don't feel the need to YOLO your life savings in on the next dip. Steadily accumulate solid projects for long-term investing. That is, of course, how money has always been made in the cryptocurrency markets. These bearish periods, recessions, crashes, all this stuff, that's when the real money actually gets made in the cryptocurrency markets. It doesn't get made buying the tops. It gets made buying the bottoms, accumulating during periods of fear, and then, of course, taking profits when we do get a market pump once again, which we will get. They always come. It always recovers. So it's just a game of patience now. Anyway, I know some of you guys don't like it when, you know, I make videos that aren't just pure freaking hopium, but look, realistically, this is how I see things playing out right now in the markets. So let me know your opinion on all this down below in the comment section. Thanks so much for watching today's video, and peace out till next time.